Hey, everybody, hope you're doing fantastic. We're back here with another dose of economic reality. We've got a lot of news to get caught up on here. This economy continues to outperform what most people expected, right? A lot of people, for some reason, are expecting a crash in the stock market, right? So we're going to get into the stock market here as well as a lot of other economic indicators. And I think some of you might be shocked at the news today if you're not familiar with how this whole thing works. You've been on this channel, you might be shocked at some of the news. Even if you've been on this channel, I was kind of shocked after a couple of the news items here that we have out. First of all, the stock market, folks, they can keep this market propped up many different ways. At the end of the day, a click of a mouse out of the central bank could send the Dow Jones, the indices higher. Right now, the Dow Jones today today, May 8th, by the way, was up 170 points. That's the sixth positive day and the longest winning streak so far this year in 2024. And we're over 4 months into the year. So that's pretty significant, the longest winning streak of the year at a time when consumers are being drained, folks. This is one of the biggest wealth draining eras, I think, in history. People surviving on credit cards, even homeowners now are strapped. I think later this year we're going to see a pretty big surge in homes coming onto the market. I think we're going to set a record for inventory. Well, not a record. I think it's going to be at least a 5-year high. Definitely going back to pre-pandemic. We'll talk about that more here in a little bit. First of all, this winning streak on the Dow Jones, what's behind it? What's going on? Yes, you have easy money still flowing into the markets. Look at the bond yield. The bond yields are still being suppressed. Also, here's some news that just makes this obvious here on what's actually happening. And here we go right here. Stock buybacks hit the highest level since 2018. You thought for some reason, because maybe profits weren't doing as well as expected, that these companies were going to stop buying back their own stocks. Of course not. This is their golden parachute. These upper level manager people, the CEOs, the executives, this is their golden parachute, keeping their own stock market or their own stock price propped up. In the meantime, supporting the stock market, but also enriching themselves, right? Now, of course, if you're an employee and you've got stock in the company, there's other people that benefit from this. But yes, a record since 2018, folks. That is about 6 years. Stock buybacks are soaring, and a sign that corporate America is bullish on the U.S. economy, or they're bullish on just lining their own pockets, right? Think about what would happen if all this money being put into stock buybacks was given out to the employees, just spread evenly across the all their employers, right? It's never going to happen. All the employees, rather. But something to think about, right? Yes, I think someone got in the ear of a lot of these companies saying, hey, you better do this with this money. You better keep the market looking good for this year 2024. Of course, every 4 years, we've got this important thing that happens in November. So, of course, they're going to want to keep this market looking as good as possible. Robinhood climbs after record earnings in the first quarter. A lot of people were surprised at that. Robinhood doesn't charge you to have an account, a brokerage account, or to trade stocks. No fees on trades, but they get paid by selling your data to big investment houses. Right. So these big investors, big investment firms, they know exactly what you're doing. That's why I think the statistic goes that 90% of traders lose money. We're talking about active traders, day traders, not long-term investors, but traders lose money 90% of the time. That's because the big money knows exactly what you're doing, and that's one of the ways Robinhood gets paid. That's not the only way. They have other ways they make money. They charge you to transfer money in and out in a faster fashion. It's free, but if you want it like the next day, they'll charge you some money. They have different charts available, or more in-depth charts, I think, if you pay a little extra, right? So I don't trade a lot nowadays. I buy stocks here and there, but I don't know about all their little perks and stuff. But I do know they have different ways they make money besides selling data to the market makers. Let's talk about this article here out of Business Insider. And I've been saying, look at the housing market, or look out for the housing market this year, especially in the fall and winter coming up this year, because inventory, a lot of stressed home sellers are going to be putting their homes on the market. Business Insider puts it like this: you want to sell your home, get ready for disappointment. So what are they saying here? Are they saying there's going to be a big market turn for the past few years. We're very good to people who decided to sell their homes. Massive relocation shuffle, of course, the pandemic. Now, so as fortunes are changing, home prices are still rising around most of the country, but gone are the days of throwing up a for sale sign and having a feeding frenzy on your house. So they're saying, combined with the rising mortgage rates, combined with the sad consumer situation with people not able to have a down payment in most cases. But this is something that a lot of people may be surprised about. And I'm probably the only channel here that told people the housing bubble was not going to go bust. Well, look at some of this data we've got here out of the housing market, out of a housing wire. Home prices grew in 93% of markets in the first quarter, folks. Who would have guessed this? 7% mortgage rates, and even higher. That prices are still going up in most, over 90% of markets, right? That's mind-boggling to a lot of people. But I told you how all this works, folks, right? There's a lot of programs right now incentivizing people to buy a home, down payment assistance programs, a lot of wealth that was created over the past few years. Homeowners are still living off that, but we see that the savings account is being drained, close to a 40-year low. We see that record amounts of 401k withdrawals, early 401k withdrawals are happening in 2023. It's on pace to set a record here in 2024. So people are taking some pretty drastic measures. We got the credit card debt exploding higher. And if you watched me a couple reports ago, might have been my last report. I had to look. I lose track. We showed you a chart detailing exactly what was happening with the credit cards, right? Banks are not tightening. Only 20 something percent of banks right now, credit card issuers, are tightening their guidelines or as far as issuing credit. Back in 2007-8, the financial crisis, that jumped up to over 60%, and it stayed there for a year plus. Folks, that at that time, back then, that was a trigger for an economic downturn along with the housing market, right? But if people can continue to live off credit cards, you'd be surprised how long this market can stay looking resilient, even though we know what's behind the scenes. But to the average person just taking a look at it, it looks pretty strong, right? When you see how housing home prices rise in 90+% of markets, right? So yes, a lot of homeowners are living off credit cards, borrowing from the 401k. And that's, a big part of the picture that I don't think anyone else is really talking about. Car prices. Let's transition a little bit to the second biggest purchase that people usually make in their life. Number one being a home. Number two, automobiles. Used car prices continue historic plunge. Wholesale prices, what they're going for at the auctions, now down 59% from the peak, and they peaked in late 2022. The adjusted price of automobiles that were sold at auctions across the U.S. fell another 2.3% in April from March. That's another big month-to-month change. That's going to be over 25% a year if that were to continue for 12 straight months. So another 25% on top of the 59% that we've already witnessed. Here's the things. The thing, not the thing. Well, things. I'm going to talk about more, but the thing for this, dealers are not passing along the savings. They're still being, as many people would say, greedy, right? If consumers are going to be silly enough to take out as much of a loan as it takes to buy the cars, why would dealer drop prices, right? Before we see bigger price corrections anywhere in the housing market, the automobiles, consumers have to learn how to say no, right? We live in a I want it now society. I want it now. Give me the biggest loan possible. I want it now. I'm not going to try to talk them down. I'm not going to wait. I'm going to buy it now, right? So that's what we're seeing, and that's how dealers are able to keep these prices elevated. I haven't seen cars, the cost of cars here in my area, drop 59% since the peak. Have you? No, but that's what happened. That's what's happening at the auctions, right? So it just means bigger profits for the dealers, consumers, still able to take out loans. Back to what we talk about, banks are not tightening that much. Credit cards, auto loans are still giving out these big loans. Therefore, you're not seeing very big price corrections. But the dealers are going to make more with wholesale prices dropping. I mean, we're going to see prices come down from the consumer side. It's just going to be a lot slower. It's going to take a lot longer than I think a lot of people expected. But a 59% drop for wholesale prices got to start showing up at some point on the consumer side of things. Americans falling behind on auto payments at record pace, folks. Another record, worse than the financial crisis. How much longer can this go on before everything falls apart here? Americans falling behind in auto loans at record pace out of MSN. Car repossessions tumbled in the early days of the pandemic. Possessions have progressively ticked higher as sky high prices for used and used cars alike force consumers to take out bigger loans. Really didn't force consumers to take out loans. Consumers decided to take out loans, and they prevented car prices from staying low. Of course, that was a big thing with the spike. People had to borrow the money, right? Prices didn't just rise for no reason. Of course, we had chip shortages, the whole thing that went along with the pandemic, the shutdowns, the travel, etc. You know what happened. But folks, that's what's happening today. We're going to wrap this one up here. What do you think about the big correction in cars, over 50%? Have you noticed 50% correction in your area? I definitely haven't. What do you think about the stock buybacks? The most since 2018. Are they going to keep this market propped up? You know what I say about the stock market. The scare that's going to bring the market down has to be so big, it's going to scare even the big billionaires and investment houses that prop this stock market up, right? So there has to be something big. I think it's going to be, when it does happen, I think it's going to be massive, an act of war, some other, real frightening situation is going to have to come out to bring the stock market down. Look at 2001, to look at different points in history. It's usually a pretty big scare. Even 2007, 2008, that was a pretty big scare at the beginning because people thought all the banks were going to fail because of subprime loans. Of course, we found out that banks got rescued, most of them anyways, and so the scare went away. And then what happened after that? Record debt binge, lending spree. The banks unleashed, able to loan out as much money as they want without any fears. And that's where we're at, folks. The biggest bubble of all time, continuing to expand. Corrections here and there with autos. For the most part, it's cost of living nightmare getting scarier for people, right? So I hope you're doing well. I think all of us here, or most of us hopefully, will be doing pretty well here because we're on top of this. We're ahead of the curve. Please make sure you're subscribed and come back for more updates. We'll talk to everybody soon. Keep stacking. Bye for now. Peace.